Okay, let's unpack this. Today, we're plunging headfirst into a really compelling stack of sources from The Economist, all dated August 30th, 2025. We've got articles covering, well, everything from high-stakes political drama impacting global finance to some pretty surprising insights into personal investments and even, the future of information itself. Our mission, like always, is to dig out those crucial nuggets, connect the dots, and give you a shortcut to being genuinely well-informed without feeling swamped. Think of it as your guide to understanding some key economic and political stories shaping things right now.
Indeed. And what's really fascinating here is just the sheer breadth of issues and how they're all interconnected. We're talking about central bank independence, which is, foundational for stability, right through to individual psychology, influencing how people invest, and even this evolving landscape of, well, information markets. So we're looking not just at what's happening, but really why it matters and what it all means for you.
Right. Let's jump straight into something that's frankly quite eyebrow-raising. This intense political pressure on the U.S. Federal Reserve, specifically targeting its leadership. Our first sources here paint a picture that could, and I'm quoting, risk serious damage to central bank independence. We're seeing direct phone calls from a former president, strong public accusations, tweets.
Yeah, and this really brings up a critical point. What is central bank independence? Why is it so vital? The sources detail these instances, former President Trump calling Fed Chair Powell, former Treasury Secretary Cook, directly on their phones. And maybe most notably, that tweet on August 29th accusing Miss Cook, who's now a Fed governor, of mortgage fraud, referencing some money-for-nothing deal. This isn't just, political noise. It's a direct challenge to the Fed's impartiality, its whole mandate, really.
Yeah. And the accusations themselves are quite specific, aren't they? Not just vague attacks. The sources get into it. Mr. Trump wanting Ms. Cook jailed, claiming a non-disclosure agreement was violated, but her attorney calls it ludicrous, politically motivated. Says it's just rehashing this old 2013 study she co-authored on FHA mortgage fraud, those government-backed loans. And the FHFA itself looked into it back then and found no evidence of fraud. So the timing now seems strategic.
Absolutely. And if you connect the dots, this looks like it goes beyond just one person. The sources suggest it's part of a bigger strategy. Trump purportedly wants to oust 4 of the 12 Fed governors, replace them with loyalists, and the underlying tension is clearly about interest rates. Trump wants cuts. The Fed's held steady, mostly just one hike since late 2024. So this politicization of monetary policy, it has really significant implications. Long-term stability, global confidence in the U.S. economy, it erodes trust.
Right. So what's the bottom line here for you listening? Well, imagine a Fed making decisions based on political pressure, not economic data. That can mean way more uncertainty. It could affect, well, everything from your mortgage rate to job security, even your savings. Ultimately, it's about trust in these core institutions, isn't it? And how fragile that can be. Okay, so from that high-level political drama, let's shift focus inward. Something more personal, but maybe just as impactful for your finances, your own investment choices. We all know the rule, right? Diversify. Don't put all your eggs in one basket. It's basic advice. But we've got this buttonwood piece here suggesting, pretty provocatively, that maybe you should defy that. Maybe buy your employer's shares. Okay, that needs unpacking.
It does. And what's interesting is the argument isn't just financial numbers. It gets into psychology, company culture. The standard advice warns against it because, well, your job and your investments are tied to one company. Double the risk if things go south. But this piece highlights the psychological upside. When employees own stock, they feel more like owners, right, on the same side as management. That can build loyalty, reduce what they call moral hazard, basically, slacking off, and maybe even boost company performance. Everyone's pulling together.
It makes sense motivationally. They point to examples like Jamie Dimon and JP Morgan owning a lot of stock. And companies often offer shares at a discount too, right?
Yeah.
Which makes it tempting. But there are downsides, these golden handcuffs that stop you selling immediately. And yeah, if the company tanks, you could lose your job and your savings. Like Enron, a classic, tragic example. So the takeaway for you isn't just about asset allocation, is it? It's also about understanding what motivates you, risk tolerance, how connected you feel to your work, a careful balance.
Exactly. It's never just about the numbers in personal finance.
Okay, zooming back out now, we've got personal choices, but they happen in this bigger economic context. And globally, our sources point to a trend described with a pretty grim term, the new doom loop. It's this cycle where financial crises, high energy prices, huge public debt, slow growth, they all fuel populism.
Right.
And then the populism makes the original problems worse. Sounds like a vicious cycle.
It really does, and it raises serious questions about long-term stability, particularly in Europe. The sources show governments increasing spending green investments, defense, reacting to crises. Germany's debt-to-GDP ratio, for instance, projected at 70% in 2025. That's way up from before the pandemic. And the OECD sees an average of 100% across member countries by 2035. And often, this debt is driven by populist policies. Voters like more spending on pensions, family benefits, local projects, things people see immediately.
Yeah, and here's a really interesting bit. The articles mention studies showing voters do reward politicians who spend more. One study found populist governments specifically boosted spending on pensions and family benefits. Seems like a direct link. But then the loop continues because bond markets get nervous about all that debt and political uncertainty. That pushes up interest rates, makes borrowing even costlier. France's 10-year bond yield is up to 3.5%. It was under 1% a decade ago. That's a big jump. And remember that sell-off in French bonds after their elections in June 2024? Markets reacting directly to politics.
But there's a nuance here, too. One EU report mentioned suggests some populist governments actually cut debt faster than others sometimes, so it's not always a simple story. Maybe that focus on fixing things can sometimes lead to fiscal discipline, oddly enough. But the main message from the sources seems clear. Without real structural reforms, cutting red tape, investing in education, boosting productivity, this doom loop threat remains. It makes societies more fragile. So for you, it's about seeing how political choices, even understandable ones driven by frustration, directly hit economic health, stability, and ultimately global markets.
Okay, now for something different and pretty fascinating. An innovation our sources playfully call one big casino, prediction markets. These are basically financial contracts betting on future events, elections, stock prices, whatever. Kind of like gambling, but the idea is they gather information, and apparently they're growing fast.
We really are, and they have this dual nature, which is intriguing. The sources track their rise, especially since 2016 Brexit. U.S. elections really put them on the map. One analyst, John Malden, even predicts they could be bigger than stock markets by 2050. That's a bold claim. Proponents say they're amazing tools for aggregating information, bringing together lots of different views to get forecasts that are often better than polls or experts. Lets people profit from what they know collectively. It's a new way of processing information, really.
Really not without problems, right? Critics and legal hurdles.
Oh, absolutely.
The sources talk about concerns over fraud, market manipulation, insider trading fears.
Of course.
Legally, it's murky, especially in the U.S. with strict gambling laws. The CFTC is looking into them. We see platforms like Polymarket, crypto-based, taking bets on elections, interest rates. Even the big exchanges are dipping a toe in the heart. CME announced a weather prediction contract just last month, August 19th. So it raises this fundamental question. Where's the line between a useful information market and just a betting shop?
Exactly. And 7 U.S. states have already banned political betting specifically. Worries about election integrity if these things get too big, maybe influence outcomes. So for you, the takeaway is, yes, these markets are an interesting way to gather info and predict things, maybe even profit, but they come with significant risks and complex regulatory issues. It's innovation pushing boundaries, but raising big questions about fairness and control.
Right. Okay, finally, let's shift our focus to Asia, to what the sources called China's stock market mystery. Despite huge government efforts, the Chinese market keeps underperforming compared to global ones. Capital is actually leaving. It's a real puzzle.
It is, and if you connect it to the bigger picture, it really highlights this tension between, well, government control and investor confidence. The sources give several reasons for the slump. Policy uncertainty. Think about those tech crackdowns, a lack of transparency, those ongoing property sector woes. Foreign investors have been selling off big time. $33 billion in mainland stocks in 2023, another $28 billion in the first half of 2024, and only about a third of global funds now see China as investable. That's a dramatic drop.
So what's the government doing about it? And is any of it working?
Well, they're certainly trying things.
The sources list various measures. State media pushing people to invest, regulators cracking down on malicious short selling, whatever that really means.
State funds were buying shares back on August 15th to prop things up.
And big companies, Xiaomi, Alibaba, Tencent, announcing huge share buybacks, probably with some government
Well,
encouragement.
despite all that, the market's still sluggish.
And the sources point to this rhetoric-reality gap. Government claims of strength don't always match the data, and investors notice. That erodes trust.
Yeah, which raises a really important question for anyone watching global markets. What happens when a government tries so hard to defy market forces? The sources seem to suggest the underlying problems, policy uncertainty, lack of rule of law, fundamental economic challenges, just outweigh these interventions. So even with massive state effort, rebuilding investor confidence is incredibly hard without tackling those root causes. It's a powerful lesson, really, in how market sentiment can sometimes override even determined government action.
Wow. Okay, quite a journey we've taken there. From U.S. politics hitting the Fed to the psychology of investing your own money, Europe's doom loop worries, the rise of prediction markets, the casino idea, and finally China's market mystery. Really diverse topics, all connected somehow, all from these Economist pieces.
Yeah, we hope this deep dive has given you a clearer picture of these, frankly, complex issues, maybe sparked some of those aha moments. Because these aren't just separate stories, are they? They're all threads woven together in this global economic and political tapestry. We've tried to get beyond just to the why it matters for your understanding of the world.
So maybe something to chew on after this. In this age we're in, with so much information, so much political polarization, how do you personally weigh the value of traditional independent institutions like central banks? How do you weigh that against the appeal of, rapid direct action, whether that's from a government or a market or even your boss? It's a question that kind of underlies all these stories we looked at today, and definitely one worth thinking more about.